Nona Peltier is here in the studio for the Business News. Good evening to you.
Good evening.
Now, we've got an annual report here from the Financial Markets Authority. This is on KiwiSaver. What's it found?
Well, it's an interesting thing. I mean, they've noticed that there has been an increase in saving. You'd expect that, more people in the working population. So the KiwiSaver is nearly $50 billion. It's a fair amount of money for people looking to retire. This is their own savings that they contribute through their workforce, workplace. Anyway, it's interesting. There's been some changes in the way that people are saving. Fewer people are saving through the default saving and conservative funds and looking more at growth funds. So that's a good sign. And a few other things that are interesting. You know, a number of people, 32,000 investors withdrew their funds to buy a house.
To buy a house. Well, it's not a surprise, is it?
Not really, you know. And that was set up in that way so that people could do that. It's one of the things that's encouraged. More though, people withdrew funds because they were suffering from hardship. So that was an increase of 25% over last year. Wow. That's a significant number. That's $100 million of withdrawals for people who needed the money. They were desperate for it. So that's interesting. And we had a chat with the Financial Markets General Counsel, Liam Mason, and rather the Director of Regulation. He has a new job, excuse me, Liam. And anyways, he was talking a little bit about fees, and we've seen some changes in fees. There's been a shift. Of course, the fees have gone up, but that's partly because the types of saving accounts have also changed. Fewer default, more growth, so you'd expect the funds, the fees on these funds to go up because they're getting a better return. However, Liam had this to say about it.
Fund providers on the whole are contributing to the success of KiwiSaver. What we said last year, and we say it again, is that as total funds increase, we want to look harder at the levels of fees being charged and whether those should be decreasing to capture economies of scale over time.
Right, so that's Liam Mason, Head of Regulation at the FMA. But you're saying as well that those fees have, what, doubled since 2013?
Yeah, they've gone up. But then again, so has the returns on those investments because there's fewer people in those default, low returning, yielding investments, more people in those growth funds, so that could be why the fees are up. And we'll see what happens, though. The FMA is certainly looking at that. There's a lot of low fees that you can get by changing fund provider. For example,
people could vote with their feet on it.
One of the things that people should do is go to the FMA site, look at their KiwiSaver tracker, which shows the return on investment and the fees that people are paying. It's worth looking at.
Good advice. How are the markets performing?
You know, a bit like yesterday, as a matter of fact. We haven't really changed. The Kiwi's steady at 64.5 US cents, 91 Australian and 49.2 British pence. But the market is down. Certainly there is concern about trade. It's not a pretty sight there with the Chinese and the United States. We've seen diplomacy kind of go out the window in that regard too. So our top 50 index, that's our share market, is down more than it's more than 0.8% down. That's 77 points, and that's adding on to yesterday. And that's at 9,070. The ASX is also down. Their S&P 200 index is down more than 1%, and we're seeing some negative reaction in the Asian markets. And I think we saw that overnight out of Europe. It's likely to continue. It depends, I guess, on what happens next. Okay. It's a lot of volatility out there.
All right, well, we'll see. I'm sure you will keep us up to date. Nona Peltier, thank you very much.